has the bubble burst? Well, I think you're going to see short-term fluctuations when you've got a very fast growth rate, and let's be clear, the growth rate's fallen to something around 7 or 7.5%. I mean, we in Britain or Europe would be delighted to have the 0.5%. So you need to see this in the context of an economy which is still essentially building a country in terms of infrastructure, in terms of taking people out of poverty. The government was very concerned about a property bubble which was building up. They saw what happened in the US with that property bubble and the consequences of it, so they started to very severely restrict lending for real estate. That's caused a slowdown in the economy. Now they're taking the feet off the brakes and letting it come back up again. So I think all these fluctuations in the short term you need to see in the context of a fundamentally solid, strong growth rate. And it's been announced that their target was 7%. So we're not falling below where they wanted the economy to be. And I suspect that you'll start to see a pickup now, but probably not to the double digits that we saw prior to the global financial crisis. The Chinese government's extremely concerned with instability in a country as large and complex as China, and therefore they worry as to what would happen if this kind of crash that occurred in Wall Street and in the city were to hit China. They don't want that to happen. But the big benefit they have is that they've got much more room to maneuver on policy because there's low budget deficits, their borrowing capacity is still there, so they're not stuck in the problem that most Western governments are stuck in, that they don't have any levers. We don't have any levers to use. The Chinese are still driving the car with lots of levers to be able to adjust things, and so that's what I think you've seen in this downturn, an adjustment. But there are also longer term things happening which have been announced. The shift of the structure of the economy from being driven by exports to domestic demand, and eventually you'll start to see consumption spending replacing infrastructure as the driver of the Chinese domestic economy. You can't go on building new roads, bridges, factories, machinery forever. Eventually that has to slow down and turn to consumption in the domestic economy. But I've actually done some studies of this by comparing the pattern of infrastructure investment relative to GDP in China versus Japan in its growth years versus Germany after the war. And I find that while China's been slightly higher, it's not way out of line with what those economies, Korea also, were doing during their period when they were really building their infrastructure and the manufacturing capacity and the capacity of the economy during that growth phase. So it needs to be seen in the context of China's long-term development. And I think that's still got probably another 20 years to run. But gradually within that 20 years period, you'll see infrastructure and new equipping of factories and so on becoming less important to GDP and consumption becoming more important to GDP, and also services growing relative to manufacturing and agriculture. There are some ghost cities around. Just as everywhere else in the world, real estate speculators make mistakes. When you've had a big boom, as happened with the fast growth in China, people have speculatively built these areas, and the local governments have been very much complicit in this because they see this as a way to develop their local area, and they think, well, we don't really take the risk if it becomes a ghost town. But again, that needs to be seen in the context of China's long-term development. So if you have an economy that's basically a slow growth and flat, as in the West, and you build a lot of real estate, it takes forever to actually soak that up. But in a fast growth economy, the ghost cities will become full. And I remember back in 1992 when they started to build Pudong on the opposite side of the river from the main part of Shanghai, and there were all these skyscrapers empty, and people said this is going to be a ghost town forever. Within a few years, the growth had absorbed all of those buildings, and today Pudong is a city of 7 million people. So you have to look at these cycles are going to be different in the context of an economy which is fundamentally building the country and the infrastructure versus mature economies where it takes a long time to wash out some of these excesses in the system. I think the information and communication revolutions totally changed the ability of the government to control information in China, even though there is still a firewall externally between China and the rest of the world. But I don't think all of that's going to lead to a kind of revolution or democracy overnight. The biggest single change I find in China is that there's now a middle class who own assets. They own properties, they own cars, they have secure business positions, they own private companies, and they are really pressing very hard for rule of law, for a judicial system, a legal system that protects their property rights and can't just have some party administrator come and make some decision which devalues all their assets and removes all the value of the hard work that they've put into things. So that's the next stage that I think you're going to see. A lot of pressure from this middle class for a better, more independent legal system.